So let's talk about Nvidia stock. This video was supposed to be up last night, but I got a bit caught up doing some renovations in the bathroom and it took a lot longer than what I thought it was going to do. And by the time it got to about 10 o'clock at night, I thought there's no chance of me getting this video up. So we're doing a bit 24 hours late, so there's already a lot of videos out there, but hopefully you enjoy this take on Nvidia. And is it a buy still? Is there still opportunity there? Or has this stock gone up way too much where it's very overvalued at the moment? Let's take a look. And just a little plug here, if you do want to join the Patreon, it is only £5 a month, which is relatively cheap compared to other patrons. It has 2 exclusive videos a week on it in Discord with 500 members on to talk about stocks, including myself. So if you want to join that, link is in the description. But let's get stuck on to Nvidia. Now, there was a lot of talk about Nvidia, about their numbers. We saw the guidance that was given in the last quarter, and can they do them numbers? That's what everybody was looking at. And Nvidia, if you look today, is having a really good day. The stock was up 6% after hours, and today I believe if we just give that a refresh, the stock has given some of it back, but it is still up at the moment. And that also gave a lot of lift to the likes of Meta, Palantir and AMD, and even DraftKings was up after hours. But since then the market has took a little bit more of a tumble off these good rises in after hours, and there does seem to be a little negative sentiment out there. And in general, I was actually going to do a video on this, is that it looks like we're looking at retail earnings. A lot of the retail earnings have come in very weak in this last quarter, and I think there was a little bit of weakness creeping in. And I think if Nvidia came in with weak numbers yesterday, we would have seen a massive drop. And I think I had CNBC on the other day where they were saying that Nvidia actually, I think, contributed to 10% of the return of the S&P so far this year. And obviously the reason why the S&P is up so much this year is because of the AI demand, and without doubt Nvidia, that's what they were basing a lot of their numbers on, is the increased demand on AI. Now, Nvidia itself, I just wanted to put into context how big of a jump up their financials have got, because what I'm seeing a lot of people do at the moment is going, oh, it's up, it's now up 240% year to date, and people are going, oh, it's up 240% year to date, so it's overvalued. The stock is up, so it's overvalued. Now, that is not true. A stock can actually go up 241% year to date, and it could still be undervalued. It could still be fair valued. You could look at a stock and it could be up that much, and you can't just say it's overvalued because it's been on a good run. Don't get me wrong, sometimes, and a lot of the times, it can be overvalued when it has had a run up like that. But it's not good to automatically assume it's overvalued because it's been up so much. And that's where you got to look at Nvidia. The difference between Nvidia is look at the numbers they are doing and look at the difference of financials, and that's why the stock has gone absolutely ballistic. So an example is, if you look at the current year, which is 2024 for Nvidia, the average EPS estimate is 825. If you look at the year ago EPS, it was 334. That's a major increase on the EPS. If you look at the revenue is set to grow 65% this year. And just to put that into a little bit more context, what I'm going to do is I'm going to use Wayback Machine, and we're going to go a year ago to what analysts were expecting from Nvidia. And if you actually look at Nvidia from a year ago, analysts were expecting 447. Now, like we just shown, that has now increased because of this AI demand to 825 and up to 1205 the year after. If you look at revenue growth, 65% a year ago, analysts were expecting this year for the stock to grow 14%. So once again, there's a context of that, yeah, Nvidia's been on a run up, but you can't just assume it's overvalued because it's been on a run up. The reason why it's been on a run up is because look at the financial difference. All the analysts have suddenly gone, this is now the EPS, it's treble, quadruple what it used to be a year ago. Look at the revenue growth, and that's the big difference you've got with Nvidia. Now, looking into Nvidia, and I'm just going to put this in here, some of you OG investors, I don't know if any of you guys were investing in the stock market in 2018, but I remember running the YouTube channel in 2018 and talking about stocks. And I remember when Nvidia, nobody wanted Nvidia. Like, look at this here, this headline here. So Friday, November the 16th, 2018, Nvidia tumbles 19% after missing on revenue and guidance, and I think they had quite high inventory. They basically had too much inventory in this quarter, and people saying there's not that much demand for Nvidia. It shows you how things can turn around so much in the stock market. I think the stock was down in 2000. It was a bad year, the stock market in 2018, for you guys that weren't invested in that time frame. We narrowly missed a actual crash, by, I think it was like 0.1%. I think Nvidia was down 30-40% that year. It was down quite a lot, and I remember like nobody wanted Nvidia, and it just shows you like in a relatively quick time how, if we actually go back to 2018 on the stock chart, I've got to go longer than 5 years actually. That's actually, so you can see like the little blip, there. Look at that, it was 50% down at one point. From September to December, Nvidia drops 50% in 3 months. So it shows you the stock market in general looks crazy, and also it looks like the stock can go absolutely ballistic, but it can have them sort of drops as well, which you've got to be really careful of. It's a 1.2 trillion market cap company, but it can be volatile at times. But I mean, obviously, if you bought at the really lows of December time 2018, that was really where that bear market in 2018 bottomed out. If you bought in that time frame, you're up 1,400%. Absolutely crazy. So congrats to anyone that did buy in that time frame, but I don't know if any of you guys did, but let me know if you did in the comment section. But let's look at these earnings. I mean, these earnings are absolutely fantastic. They had big numbers to beat, and that's the thing. With this run up here, there's a lot of hype now starting to build. I mean, that's like a rocket ship going up on that stock chart. You've got to be hitting good numbers to justify the valuation there, and they did it. Non-GAAP EPS beat by 0.61. That is good. Revenue plus 101% year over year. They beat by 2.4 billion in revenue. Wow, that's absolutely insane. Data centers up 141%. Obviously, it does pay a small dividend. Good positive for the gaming sector. Looked pretty strong. Now, the Q3 outlook, everyone is looking at what is going to be the outlook for Q3, and once again, absolutely blasted the numbers away. Revenue is expected to be 16 billion versus 12.4 billion. Crazy. And also good guidance on the profitability as well. So there's no wonder the shares rallied off this. To keep up this run that it's been on at the moment, they needed to smash numbers, and they did. They absolutely smashed the numbers. And for me, as in a trend in general, I wouldn't want to bet against this trend. There's a lot of hype that's building up there, and people are just, as long as they do these numbers, it could just go higher and higher and higher. There'll be things like if they announce a stock split, which they've done before, that can even add, even though it has no fundamental change to the business, just announcing that now would probably send the stock up even more. And it is caught up in that momentum, which is something to be careful of, because this sort of momentum here can see major drops. But as long as they're releasing positive news like that, the stock is going to do, I think, very well. But it only takes one little blip, and as you can see, as history has shown before, the stock has got big plummets in it on the share price if need be. Now, obviously, when you look at the company is looking sensational on the revenue growth and the profit growth. Financial health of the company is very good as well. Obviously, they've got a lot of cash on the balance sheet. And the big thing that the company has had now is that obviously the company trades at 253 times earnings, which actually, when you look at the historic valuation of what it has normally traded at, if we just go on price to earnings here, you can see the company has normally traded around 23, 30, all the way up to 80 times earnings, 70 times earnings, 60 times earnings. So the big thing is that the company has, this is why the share price has gone absolutely bonkers, is that we've seen the financials go absolutely crazy. But the other thing that we talk about on this channel is that the stocks that do really well are not companies that just go bonkers on the financials. It's when they have metric or valuation expansion as well. So if this company normally goes from 30, 40, 50 times earnings, then all of a sudden the market goes, actually, let's trade this at 253 times earnings. That's where a ton of the share price return has come from. So it's not only just the actual financials, but because the market's gone, we're going to trade you at 10 times or whatever you want it to be, 7 or 8 times the valuation that you normally are at. And that's the other thing that sent Nvidia a little bit bonkers at the moment. So when you look at a valuation point of view, it does look a little rich to what it's normally traded at. However, you could argue it's never done this growth before, which is the other situation you've got to put in. And you can see here, for example, the PE history of the company, and you can see the big shoot up that it's had at the moment. Now let's look if this is a valuation that this company can hold. Now it's worth putting in, the company is currently doing share buybacks, but I've not added this into my valuation, but something to potentially weigh up. And obviously if they're doing the amounts of profit revenue growth they are doing, they'll probably announce a few more share buybacks going forward, but I thought I'd just let you know on that one. Now let's look at the valuation. Now the company itself, the big thing is, what's it going to grow at? Obviously, it's had this major boom in revenue because of this AI boom. Is that AI boom going to continue? A company's going to slow down the chips. There's been a lot of loading chips up at the moment. Are we going to see a slowdown in the chips and a slowdown in the revenue growth? This is what I don't know. Obviously, analysts at the moment are expecting, obviously, they're going to be really tough numbers to beat next year, and then it'll go down to 37% growth. You know, that's the ultimate thing with Nvidia. Is really hard to predict what the consistent growth will be and how long this boom for AI will continue, or are people heavily loading up chips because for storage reasons. This is a really tricky thing. So that's the big thing that you got to weigh up. So I've put here 25, 35, 45% revenue growth, which is a very, very wide range, as you can see here. Profit margin, I've gone 24, 27 and 30%. Now obviously if there's demand for chips, you'd think they'd be able to charge higher prices on them, which is probably worth kind of weighing up here. I've kind of stuck around what historically they've done, which you can see here, which is sometimes choppy depending on supply and demand once again. So you can see it, they were all the way down to 18% at the peak only a couple of months ago. You know, they're up to 32%. So I think this is relatively okay predictions of 24, 27, 30%, and I put a multiple of 40 times earnings. Now the big thing, like I said, is the company at the moment is trading at 253 times earnings. So there's been a big expansion there, but the thing is that's on trailing metrics. So, you know, very quickly you'll start to see that profitability, you know, just really increase. If you have a quick look here, you know, you can see at the moment, if you look at trailing metrics, it's 4 billion. If you go on a year's time, it's up to 23 billion. And, you know, that's the issue when you use trailing metrics for sure. And without doubt, a lot of investors at the moment are using future thinking metrics. So that's obviously something else to kind of price in at the moment. So I've gone 40 times earnings. Once again, that's up for demand, or debate. What's the longer term metric it trades at? So I've gone 40 there. And if you actually look at the longer term, if it grows at 25%, 24% profit margins, 40 times earnings, you're not going to make anything on this stock. But this is where it gets surprising. If it grows at 35% and 27% profit margins, you actually have 43% upside. If you actually see 45% growth with 30% profit margins at 40 times earnings, you could actually maybe get a double up in the next 5 years, which is really a big surprise, because you would think with the share price going absolutely bonkers, you would think this is way overvalued. But you can see here, on the numbers point of view, it doesn't look too bad. Now the problem is that 45% growth is very high. 30% profit margins is very high. You know, is that AI demand going to hold up for that next 5 years to grow that much? 35% growth for 5 years it would be very hard to do. You know, 30% profit margins, 40 times earnings. It is, those numbers are very high, which you've also got to consider. So the big thing when it comes to the ultimate point of the video is the company a buy? Is it a sell? Is it overvalued? The numbers aren't ridiculous. Like, you can see why the share price has jumped so much. But the problem is to still see upside from here, you've got to see the company smash it. You know, 45% year-over-year revenue growth is tough to do. Hold the 30% profit margins. We've seen the profit margins historically. They can go in, and if we go back to the past performance, the profit margins can go in and out, you know, down to 13%, up to 34%, down to 28%, up to 32%, down to 16%. Same again, that could affect the company, especially when you're valuing at such a premium right now. So I would say if you have knowledge in this space and you know the AI demand, if it is going to drop off or when it drops off, or if you can see it dropping off, then potentially you'll go, okay, you know, I'm going to buy this. For me on the outside, I don't know what exactly is going on with the chip industry. I don't know if there's going to be a slowdown, and any sort of diversion in the growth to lower growth or lower profit margins, I think the share price could have a bit of a reality check where you do get it a bit of a cheaper valuations. Now, obviously, like I said, at the higher end, you know, let's say you grow 45% a year, if you do 30% profit margins, let's say the company goes, oh, you know what, we're not going to trade you at 40 times earnings, let's be a little bit ridiculous. Let's say the company goes to 80 times earnings. I mean, obviously, there's still plenty of upside there. So if you're actually so bullish on the stock that you think they can hit these perfect numbers, you know, I can understand why you're buying it. But for me, that doesn't know exactly what the longer term revenue growth is, what the longer term profit margin is, what's going on with that AI demand, how long is it going to go for. And for me to have a margin of safety here when buying this stock, it's not for me. It's not for me. The valuation is quite rich, and any sort of blip in those numbers, I think you'll see a massive dump in the share price. Now, like I said, if they keep executing, maybe it holds up, maybe it goes higher. But for me to have a bit of margin of safety here, I think for me, I can't buy it. I can't buy it. But I can see why if you're ultra bullish on Nvidia, you could be saying that it's going to go higher. But for me, I don't have that knowledge in the space to know if there's a chip slowdown coming on. How much is that AI demand long term going to hold for long term, which is a little bit of an issue. So, like I said earlier at the start of the video, the company itself, you would automatically go, oh, it's overvalued because the share price has gone absolutely crazy. You can see here there is some justification of the share price why it's gone up, and it isn't automatically assume it's overvalued because it's gone up. But at the same time, has it gone up maybe a little bit too much? I would say so personally, but you can see why there has been some appreciation in the share price for sure. Hope you enjoyed the video. Let me know what you think of Nvidia. Are you a seller? Are you a buyer? Are you a holder? Do you think it's just a hold? Let me know what your thoughts are. There's definitely a few mixed opinions out there at the moment. Hope you enjoyed it. Smash the like button. Don't forget, if you want some more content from me, join the Patreon, and I'll see you on the next video.